Credit Suisse, a 167-year-old name in the banking sector, is dealing with a big financial crisis. But how did the second largest global investment bank in Switzerland end up in a mess like this? I'm Neha Vashishth from etmarkets.com, and in today's video, we are going to dive deep to know what's this crisis all about and how will it impact India. What is Credit Suisse? Credit Suisse Group is the second largest global investment bank and financial services firm in Switzerland. It is the 12th largest foreign bank in India, owning assets worth 20,700 crore rupees. The firm has been in financial trouble over the past 2-3 years and has been questioned for submitting its audited financial statements. Last year, there were also talks of a possible merger of the bank with a peer bank, but it did not happen. So what exactly happened? According to a report by Reuters, there are a lot of reasons behind this mess. Scandals, top management changes, multi-billion-dollar losses, and an uninspiring strategy seems to be a reason behind it. The sell-off in Credit Suisse shares began in 2021, triggered by losses associated with the collapse of investment fund Archegos and Greensill Capital. After Antonio Horta Osorio's resignation in Jan 2022, Ulrich Körner joined as the new CEO of Credit Suisse, but his strategy failed to win over the investors. Credit Suisse confirmed last month that clients had pulled 110 billion Swiss francs of funds in the fourth quarter, while the bank suffered its biggest annual loss of 7.29 billion Swiss francs since the financial crisis. The troubles turned into a fully blown crisis after reports said its largest investor, Saudi National Bank or SNB, ruled out more financial assistance to the bank, citing regulatory issues. After this, the cost of insuring the bonds of Credit Suisse Group against default climbed to the highest on record. 5-year credit default swaps for the bank jumped as much as 36 basis points on Monday to 453 basis points, according to pricing source CMAC. This triggered a massive sell-off in the stock. The stock plunged as much as 30%, triggering a trading halt. As per the Reuters report, the shares have lost 75% over the past 1 year. Now what? The Swiss central bank has decided to lend up to $54 billion to Credit Suisse to shore up liquidity and investor confidence. But some analysts believe that it is unlikely to be enough to soothe the investors. Well, that's all for today. This was all about the Credit Suisse crisis. Stay tuned with etmarkets.com for more.